So realized vol's been pretty stable on Bitcoin. Been sitting at around 50. That's this yellow line kind of flatlining. You can see the implies have kind of stayed up as well. We got a little bit of a rally over the weekend. Started to drift down on implies. We got a bounce. So implies are still sitting at around 70. And then realized is sitting at about 50. So that takes the carry to plus 20 basically in Bitcoin. So that's pretty juicy carry in Bitcoin right now. You don't have quite as much in Ethereum, as we did get a bounce in realized up to 65. And the implies are only about 5 volt premium right now in ETH to Bitcoin. So better realized, still positive carry, but better realized on ETH recently. But it looks like the juice to be had for gamma sellers is in Bitcoin right now. But they don't seem to want to sell it because they're expecting some volatility around the halving. We've also got CPI data out tomorrow. We've got a load of geopolitical tensions between Israel and Iran now, and we don't really know how Iran is going to react to this, and whether China's going to play any role of kind of to kind of temper things down, because obviously they have influence over Iran, etc. So these are all things that the market's kind of a little bit frightened and scared about right now. It's kind of the appetite to sell gamma doesn't really seem to be there. Now that may well change. Certainly heading into the weekend, we do tend to see more supply come anyway. So after CPI and into the weekend, I wouldn't be surprised to see some of these implies coming off a bit. So if I have been selling a bit of front end. I do think it makes sense to sell a bit of April. I don't think the halving event is a one-off vol event. And therefore, I think selling front end makes sense. And if you don't want to sell it outright, then selling it via calendars looks like a sensible trade to me. All right, so that is what I'm thinking on realized right now. Jumping over to term structure. You can see the term structure hasn't moved massively, but it has kind of flattened a little bit. And the way it's flattening is through the front end coming up a little, and then the back end is actually drifting very slightly in Ethereum. You can see down a couple of vol points here, down about a vol point in Bitcoin, and about 2.5 vols in long dated Ethereum. And then you can see this front end supported in Bitcoin and slightly better supported in Ethereum. So you're seeing a very slight flattening there. And we think that is a flattening worth taking advantage of. We think this curve is going to fall back into contango at some point. And therefore, we think selling the front end to play a bit of a halving vol reset would be the right way to be positioning right now. I think that's echoed by my friend over there at Amber Data, Greg Magadini, who I spoke to recently. He also thinks vol is probably a sell. You tend to see, every event or the market prices an event in crypto just tend to have a bit of a vol premium associated with it, and then the vol resets pretty hard. So we would expect a similar. It's just a question of whether you're going to get a big move. But with the halving, there's no real precedent for the market to have this monster move on the day of the halving, right? And so therefore, we do think the vol's a little bit, I wouldn't say mispriced, but we do think the vol's a little bit elevated, unjustifiably so, and therefore needs a bit of a whack once the date has passed, basically. Okay, those are my thoughts on term structure. If we now look at relative value, the Bitcoin Ethereum spread is at about 5 vols in the front, but you can see the realized vols like 10 to 15. So 5 is actually quite cheap if you're trading your gamma, as some of these volar funds are. Now the back end's close to 0. So even though we've got really decent realized, we know what the long run average looks like in this spread, the back end is still at 0. So that's telling me that Bitcoin vol is elevated versus where it would normally be. And I can only put that down to the halving and people thinking that there's some big move coming on the halving, right? Ethereum Bitcoin spot spread, as we said, did trade really poorly last week. Looked really heavy, looked like it was going to break Jan lows and then bounce violently on Monday. So it looks like that support has held in that spread as ETH led that rally. Longer term, though, we do still like ETH. We're not quite convinced that this is the turning point where ETH now going to outperform sustainably for a long time. So, without the specific catalyst of the ETFs in Ethereum and you starting to get the right noises out of the SEC, I'm not sure that's necessarily going to gain that much traction. I would love to see an overshoot to the downside on Ethereum, which we didn't get. If we got that, longer dated calls and call spreads with year-end type expiries are going to be the trade for me in Ethereum that I will be looking to add to the books right here, right now. I've just got my Ethereum holdings. I've got a couple of hedges in place in futures and put spread collars. Outside of that, I haven't topped up my Ethereum, so I've got no speculative longs on an Ethereum right now. Okay, so that's where I am on relative value, and then on skew, key supports obviously holding 65k on Bitcoin, holding pretty well, and that 3200 area on Bitcoin. So as both those supports held, we did start to see a shift back towards call skew in the front. People obviously monetizing puts, starting to bid for calls, put some short dated calls on the book. So you can see that most dramatically in what happened to the Ethereum skew. So a big reversal in Ethereum skew from puts back into call premium. Bitcoin managed to stay in call premium the whole time, but didn't. So it's kind of there or thereabouts. But the whole curve now is back into call premium for both assets. The front end is looking at about 2 or 3 vol call premium, and the back end is down to around 6 vol. So this term structure of skew, as we call it, not looking quite as steep as it was, where it had a really dramatic put skew in the front and then a really steep call skew in the back. Now it's just got call skew everywhere, and it's a much flatter curve where we go from 2 to 3 in the short dates up to about 5, 6 in the back end. Now, back-end calls obviously had been very well bid generally, as everyone was much more confident about the long-term narrative. And that's why we think generally Vega buying that you see is on long-term upside, right? And as we start to see pressure on Vega in general, it makes sense that we're seeing that pressure on the upside as well, because a lot of that Vega is parked in upside calls. So people are probably happy to offload that stuff. And therefore, we're seeing that call premium come back a little bit in the long end, right? So essentially, I'm saying Vega demand in the long end comes from upside. No one really cares about buying long dated downside, right? That's not what they believe is the story for crypto. They think just through the passage of time and adoption increasing, etc., crypto is going to go higher. So in the long term expiries, that they kind of want to play more on the upside. All right, so that's what I'm seeing generally in vol and skew across the space. In terms of dashboards, as we said, really positive carry. We've got about a 92nd percentile in that positive carry of 21 vols in Bitcoin, which is what makes me think selling Bitcoin options is the trade right now, particularly in the short dates. Call overwriting obviously looks good if you're long anyway. You're getting to harvest some decent premium there. And Ethereum, similar story in terms of the strategy compass, but you're not quite as much carry available because we are realizing more, as we said. Okay, so that's the two dashboards. In terms of flows, small down on Bitcoin, down to $7.5 billion as BTC broke above 70K, not really bringing in a load of fresh flow. Largest clip we saw was at April bullish risky in about 1,000 lots. That was the 64K, 71K risk reversal, selling puts, buying calls. Looks like a halving trade. Someone trying to play a rally into the end of the month. We also saw outright option buying in April to June, upside in the 75 to 85K call area. And then those long dated December 100K calls getting bought, March 25, March next year, 200K calls getting bought in smaller size as well. And then some puts did trade as well outside of the bullish risky getting sold. We did see a few put buyers as well in the front end, which is fairly typical. Okay, and then Ethereum flows were pretty flat at around 5 billion on the week. 26th of April expiry call. Call spread, put spreads were sold and call spreads were bought. Just a little typo here to ignore the call here. So put spread sold. That's this one here, the 31,2600 put spread, which was bought the previous week. That was sold back out. And then call spreads getting bought in the 3740. So that's all April flows. Super short dated calls were sold outright here. They got squeezed as we rallied through and we went back up to 3700. So that was a painful trade. And then up here, we've got some May and June calls going on, various types of structures, call calendars trading, outright calls trading, etc. But in general, similar to the trade that we saw where people buying closer to the money April and then selling out of the money May, we're seeing that same trade but kind of rolled out where people are buying closer to the money May, which is here, and then selling out of the money June to kind of partly finance it. So that's the sort of trades that we're seeing in calendars. All right, in terms of gamma positioning, dealers look to be short gamma on Bitcoin and long on Ethereum. Bitcoin dealer gamma has been negative for ages now. Hasn't gone massively more negative, but it's sitting in negative at about 20, 30 million right now. But you can see the strikes And let me clear some of these annotations actually, so you can see it clearer. So you can see in the yellow, which is the 26th, and the red, which is this week, we've got all these short bars basically, right? All the way between 65K and 75K. So dealers are just short all these strikes, it looks like, right? And they're long this upside at like 80K, which is quite far away basically. So this kind of explains why the vol's so elevated and why the vol carries in the 90th percentile, because dealers are short everything. And so if dealers are short everything and we're going into events like CPI and particularly the halving, and they're thinking there might be volatility, then they're not going to let the vol come back down yet. You're going to wait for the halving and then they're going to smack the vol, because you'd rather just stay safe, not get lifted out of loads more options and earn it through time through the theta, than just crunch the vol and risk getting lifted out of loads more risk that you don't want to do. So I think that's what's going on here. The market makers are keeping the vol elevated because they are short all these strikes. Now, even though they're short all these strikes, the actual gamma position isn't that big. So I don't think it's big enough to create loads of excess volatility, but it does show us which way around the street is, and it does explain why the implied vols are stubbornly holding up. Now, Ethereum dealer gamma is longer than it was last week. It was sitting at around 10. It's up to around 2030 now. You can see the big strikes that the dealers seem to own are 37 up to 39, but they are short the 36 and a little bit short below that. So it looks like they've got a bit of a skew position on right now, where they're long upside, short downside. Now, this long position in theory should be a dampener of vol, but it didn't stop dealer. It didn't stop Ethereum ripping 7% yesterday. So it just shows you that the dealer gamma on Ethereum is not big enough to stop the big flows. The big flows are coming, they're coming, right? And the market's going to do what it wants to do. But what it does tell us is if we do go down below 36, 3,500, whatever, the gamma positioning is not particularly long. Therefore, it's not going to act as any real support to the market. So moves could get quite dynamic on the downside if there was a reason to sell it, basically, right? So that's what we should read from this. But bear in mind, so far that long gamma positioning is doing very little to stop this market from moving. All right, so that is dealer gamma. That's the summary for this week in crypto. Thanks a lot as always. I'll catch you guys later.